What if one of the most controversial energy sources in the world is about to become one of the most important investments of the next decade? While most investors are focused on AI stocks, crypto, and tech companies, something much bigger may be happening behind the scenes. Artificial intelligence, data centers, electric infrastructure, and global electrification are creating an enormous demand for energy. And many governments are realizing renewable energy alone may not be enough. That's why nuclear energy is making a massive comeback. And at the center of this story is one resource: uranium. In this presentation, we'll break down why uranium demand is rising, which countries control supply, why AI could accelerate nuclear growth, the biggest risks investors should know, and which uranium companies may benefit the most. And before we continue, if you haven't watched our previous videos on silver, copper, and global trade choke points yet, check the cards above because all of these topics are deeply connected. Also, don't forget to subscribe, activate the notification bell, and leave a like because it really helps the channel grow. For years, many investors believed nuclear energy was slowly dying. After disasters like Fukushima, public sentiment turned strongly against nuclear power. But today, the conversation is changing. Countries around the world are facing rising electricity demand, unstable energy markets, and pressure to reduce carbon emissions. At the same time, AI data centers are consuming enormous amounts of electricity. And unlike solar and wind, nuclear energy provides stable baseload power 24 hours a day. This is one reason uranium has returned to the spotlight. Many analysts now believe nuclear energy could become a critical part of the global energy transition. And if that happens, uranium demand may rise significantly over the coming years. So what exactly is uranium? Uranium is a naturally occurring radioactive metal used primarily as fuel for nuclear reactors. What makes uranium so important is its incredible energy density. A very small amount of uranium can generate enormous amounts of electricity. Compared to fossil fuels, nuclear power plants can produce massive amounts of energy with relatively low carbon emissions. This is why many governments see nuclear energy as a possible solution for balancing climate goals and rising electricity demand. However, uranium is also politically sensitive. Nuclear energy involves safety concerns, radioactive waste management, and strict regulations. That's why uranium remains one of the most strategically important and controversial commodities in the world. Now let's look at the countries controlling global uranium supply. Kazakhstan is currently the world's largest uranium producer. Canada and Australia also hold major reserves and play critical roles in the global uranium market. Countries like Namibia, Uzbekistan, and Russia are also important producers. This concentration creates geopolitical risk. Just like oil and natural gas, uranium supply can become heavily influenced by political tensions, sanctions, export controls, and global alliances. Western countries are increasingly concerned about energy security and dependence on foreign uranium supply chains. That's one reason why uranium production and nuclear infrastructure are becoming strategic national priorities again. So why is nuclear energy making a comeback? The answer is simple. The world needs more electricity. Renewable energy sources like solar and wind are growing rapidly, but they also face limitations. Solar power depends on sunlight. Wind power depends on weather conditions. But nuclear reactors can produce stable electricity around the clock. That reliability is becoming extremely valuable as global electricity demand rises. Countries trying to reduce carbon emissions while maintaining energy stability are increasingly reconsidering nuclear energy. Even major technology companies are now investing in advanced nuclear solutions because future AI infrastructure may require enormous amounts of reliable power. If you're enjoying this macro investing content so far, don't forget to subscribe and activate the notification bell because we regularly cover global energy, commodities, and investing trends before they become mainstream. Artificial intelligence may become one of the biggest drivers of future electricity demand. AI systems require enormous computing power, and that computing power depends on data centers operating 24 hours a day. Companies like Microsoft, Google, Amazon, and OpenAI are investing heavily in AI infrastructure. But powering these systems requires massive energy capacity. Some analysts believe AI-driven electricity demand could reshape global energy markets over the next decade. And this is where uranium becomes extremely interesting. If governments and corporations decide nuclear energy is necessary for long-term AI expansion, uranium demand could rise much faster than many investors expect. By the way, if you haven't watched our copper video yet, check the card above because copper and electricity infrastructure are deeply connected to this story as well. One of the biggest bullish arguments for uranium is the potential supply gap. Building new uranium mines is expensive, slow, and heavily regulated. Many mining projects take years before becoming operational. At the same time, global uranium demand may continue rising as more countries expand nuclear energy programs. Some analysts believe future uranium supply may struggle to keep up with demand. And if that imbalance grows, uranium prices could experience strong upward pressure. However, commodity markets are always cyclical. Prices can remain volatile and unpredictable. That's why risk management is extremely important when investing in uranium-related companies or commodities. Uranium has experienced extreme volatility throughout history. Prices surged dramatically during previous nuclear growth cycles. Then, after events like Fukushima, uranium prices collapsed as many countries reduced nuclear expansion plans. But recently, prices have started recovering again. Investors are once again paying attention to long-term nuclear demand. This reminds us that commodity markets move in cycles. Periods of underinvestment can eventually create shortages, and shortages can eventually create powerful bull markets. Do you think uranium is entering a long-term bull market, or is this just another temporary commodity cycle? Let me know your opinion in the comments below because I'd really like to hear what you think. Now, let's look at some of the major uranium companies. Cameco is one of the largest publicly traded uranium producers in the world. Kazatomprom is another dominant player because Kazakhstan controls a major portion of global supply. Companies like NextGen Energy and Denison Mines are also attracting investor attention because of their future development potential. For investors, uranium exposure can come through mining stocks, ETFs, or broader energy portfolios. But remember, uranium investing carries substantial risk. Commodity prices, political changes, environmental regulations, and operational issues can all impact company performance. And if you want a full deep dive analysis on uranium stocks like Cameco, NextGen, or uranium ETFs, let me know in the comments because that could be our next video. Of course, nuclear energy also comes with serious risks. Safety concerns remain one of the biggest challenges. Major nuclear accidents have had enormous political and social consequences. There are also concerns about radioactive waste storage, construction costs, and government regulation. Nuclear projects are expensive and can take many years to complete. Public opinion also plays a major role. Some countries strongly support nuclear expansion, while others remain highly opposed. This means the future of uranium will likely depend not only on economics, but also on politics, technology, and public perception. And if you enjoyed this type of geopolitical investing analysis, don't forget to leave a like because it helps more people discover the channel. So, could uranium become one of the biggest energy stories of the next decade? Possibly. The world needs more electricity. AI is accelerating energy demand. Governments want lower carbon emissions, and nuclear energy is returning to the global conversation. If uranium demand continues rising while supply remains constrained, the market could experience major structural changes. But investors should always remember that commodity markets are volatile and unpredictable. This presentation is for educational and informational purposes only and should not be considered financial advice. Always do your own research before investing. Thank you for watching, and don't forget to subscribe, activate the notification bell, and check out our videos on silver, copper, and global trade choke points, because all of these global trends are more connected than most people realize. From a technical analysis perspective, uranium price support and resistance zones are approximately shown in this chart. On the support side, the major levels are $6,500, $6,100, and $5,700, which could act as important reaction zones for price movement. On the resistance side, we have $7,300, $7,700, and $8,100. A breakout above these levels could attract stronger market attention and bullish momentum, and if the uptrend continues, the next potential price targets could be $8,600, $9,100, and even $9,600, although these areas have limited historical price structure. It's also important to remember that, based on Gann theory, the 50% zones between these levels may also play a significant role, as many traders view them as potential support and resistance areas. Thank you for watching this video all the way to the end. If you found this analysis valuable, make sure to leave a like, subscribe to the channel, and activate the notification bell so you don't miss future videos about global markets, energy, commodities, and stock analysis. Also, let me know in the comments what topic you'd like us to cover next and whether you want a full deep dive analysis on uranium-related stocks. And if you haven't watched our videos on silver, copper, and global trade choke points yet, make sure to check them out as well, because all of these global trends are deeply connected. And finally, remember that financial markets and investing always involve risk. Everything discussed in this video is for educational and informational purposes only and should not be considered financial, investment, or trading advice. Every individual is responsible for their own financial decisions and should always do their own research, risk management, and personal financial evaluation before investing. Thank you again for your support, and until the next video, protect your capital.